Good afternoon, ladies and gentlemen. This is Jesse Colombo from Cyber Trading University, and I'm excited to have Thomas Wood from Value Charts on today with our closing bell. He's going to be teaching us how to trade candlesticks with momentum, favorite topic of mine, and he's going to be showing you how to spot momentum trends, identify the strength of a move with momentum, discuss what is a momentum inflection, how to use them, and then he's going to have a live Q&A at the end. So looking forward to that. That'll start in about 26 minutes, and until then I'll be doing my daily market update. So right now I'm watching the S&P 500 as usual. Just draw my lines. So it looks like we got a little bit more of a push above that consolidation. You can see 2,120 was that important resistance level I was watching that's now a support. It struggled for a few days. For the last 2 days it struggled, sold off a bit, but still remained above that 2,120 support. So we got a little bit of a push, but I really want to see a true breakout above this level. Looks like it could be forming a pennant type of consolidation pattern, and if it can push above there next week, maybe even tomorrow, we'll see, but probably going to be a light trading day, light volume before the 3-day weekend. So I want to see if there's going to be a follow through next week above here. If it can follow through and break out above and breaks below, that'll negate this bullish breakout. Alright, let's see the Dow. Same pattern, not surprising. See, broke out of that wedge. It pulled back today, sold off, touched that support, and then rallied toward the end of the session. So, good sign to see it bounce off there. Looks like it's also performing some sort of a pennant, but it needs to break above and follow through to the upside. If it breaks back below, that would negate the bullish breakout. Let's look at the Nasdaq 100. Nice follow through. You can see tech's acting a little bit stronger, and that's why it pushed the Nasdaq 100 up a little more than the other indices. So bounce right off that 4,480 support, but it really needs to clear these highs that were reached back in late April. So I want to see it break above 4,540 and 4,562, surge above those resistances in order to give another bullish signal. Let's look at the dollar. All right. So I was watching that resistance. You can see it just pushed above there 3 days ago, and now it's above that, so it's a support. The dollar pulled back a bit today, no real clear signal, but it's above a major support. So just want to see where it goes from here. It negated its breakdown though. You can see it broke below that support that had been forming since January, and then rose back above it. So I'll be watching that. Let's look at the euro. You can see the euro pulled back for the last few days. I'm just watching this support level at looks like 1.11. If you connect the recent lows, it's right around 1.11. So I want to see if that holds. Let's look at oil. Oil surged again today, so it's still pretty much above that $58 support that I've been showing for the past few days. You can see just the highs of that pennant in December, highs of the pennant in late April, and then also you can see that it was the lows of this consolidation for the past month or so. You can just see it bounce right off 58. So I want to see if it breaks out of this possible pennant type pattern here, if it can break to the upside and keep going, or if it actually breaks below and then keeps dropping. So just watch those levels. All right, let's look at gold. You can see gold is actually back in its range again. It tried to break above 1220, just couldn't do it because of the dollar strength. But because we're not seeing a real clear signal in the dollar yet, same thing with gold. You can see it's just back in that range between 1220 and 1180. So just bouncing around. It really needs to break one of these levels convincingly to give the next signal. So you folks want to discuss any of the stocks we traded in Cyber Group today? Just let me know which ones you want to see, and I can do a daily analysis. I still haven't installed my platform that lets me look intraday. So I'll probably do that tomorrow. Starting tomorrow, we'll look intraday, and I'll do a daily technical analysis recap of those stocks. But just let me know which stocks you want to see that we traded in Cyber Group, and I can let you know what I think of them. All right, let's take a look at DEPO. Just pulling up my platform. Just bear with me one moment. Here we go. So you can see this stock is still in a longer-term uptrend. The 200-day moving average is still sloping upwards, so that's a good sign in the longer term, but you can see it's pulled back after it became overbought in late April. Looks like it's forming a little bit of a consolidation pattern, a possible flag. I want to see if it breaks down from the flag, because you can see there's been some downside momentum over the past month. So I just want to see if it tries to test that 200-day moving average. I'm not seeing any breakout here or signs of short-term strength. Actually, I'm seeing a little bit of short-term weakness just because that big gap from 24 down to 22, and then also on very high volume. So I would want to see some sort of a bounce off the 200-day or some sort of bullish follow-through before looking for a long signal on this. But the longer term looks good for now. All right, SDRL, Seadrill. We trade that so much. Such an active stock. Look at this, up almost 9% today. So the longer term trend is down. 200-day moving average is down. So you can see it's got a little bit of a recovery for the past 2-3 months because of oil prices. But it's going to take more than that to really turn this stock around on daily, because you're going to need to see it break above the 200-day moving average, and you're going to want to see that blue line, that average, turn up. So it's going to take some time just because it's so much momentum is to the downside right now. But I'm watching $14 as the next most important overhead resistance. It's at it closed at $13.94, so $14 is just 6 cents away. So it really needs to push above there tomorrow or the next few days. Let's see if it can follow through to the upside and then maybe break above that 200-day moving average first. Lita says sort of a cup and handle pattern, possibly, but typical cup with handle patterns, the bullish cup and handle patterns, you'll oftentimes see them in a more bullish setup where you'll see, for example, instead of a long downtrend, you'll see an uptrend, and you'll see the 200-day moving average will typically be going up, and then you'll see a cup with a handle form. And I would like a pattern like that more than I would like something like this, because there's always the risk of some sort of a rebound being a dead cat bounce. So that's the one risk that concern I have as far as Seadrill for a swing trade, until it breaks above this moving average and then can negate the downtrend. But for now, I just want to see if that technical situation improves. All right, any other Cyber Group stocks you want to discuss where we can look on daily? As I said, I'm showing you on daily right now just because I'm using another computer than I normally use, so for these recordings. So going forward, I'll have my a platform set up where I can look intraday and then do an intraday technical analysis recap at the end of the day. All right, let's look at Lumber Liquidators, down 16.5% because the CEO unexpectedly resigned. You can see this gap down on strong volume, longer term downtrend. It's definitely a stigmatized stock. So I know a lot of people like to buy these stocks that are cheap or have fallen, but I don't like to catch a falling knife. I don't like to get involved with a stock like that would be stigmatized by some sort of a problem. I know there's some value investors out there who specialize in that, but as far as momentum trading, I think the odds are against you when you have a definite confirmed downtrend until it, let's say, turns around. So I'm watching $20 as a major support level just underneath. It closed at $21.10. So it's above the $21 minor level and then the major $20 level. So I just want to see if that acts as support. Maybe it bounces from here. If it breaks below 20, then it'll keep on heading lower. All right, Shaq, one of Fausto's favorites. Shaq, incredible. The momentum here is ridiculous to the upside. You can see lots of strong volume. Volume's been picking up in recent days. It cleared the $80 psychological level, which was also the prior high back in early May. So that's a good sign, but at the same time, it's a bit overextended on daily. So the concern is that it could pull back just because it's a little bit overextended beyond the prior high. So 80 is a support, but it's almost at 90 now. So there's certainly a good chance of intraday momentum to the upside, but as far as a swing trade, I'd be a little concerned just because it's so far extended. If it can break 90, that would be a good sign maybe over the next few days, and then if it does, there's a good chance just on momentum alone it'll try to hit 100 just because it's such a strong psychological level. I'm not predicting it will. I'm just saying, just based on technicals, that when you have such a major psychological number, it tends to attract prices to it like a magnet. So watch that if it can break 90 on volume, and hopefully we'll get some good day trading days out of it too. All right, let's look at VOD. VOD, same thing, high volume buying. You can see it just gapped up. It's gapped 2 days in a row. And right overhead, it looks like 39 is the minor level to watch on daily, and then certainly 40 is the major level to be watching as far as psychological possible resistance levels. And I'm also seeing a support. I'm going to show you. Let me just draw it so you can visualize it a little bit better. I'm watching $37 as a likely support, because you can see that prior high back in early December, and then also it acted as resistance in early May, and then yesterday it cleared it, and then today it really cleared it on very high volume. So I wouldn't want to buy it as a swing trade just because of it's a bit too overextended beyond 37. I'm not saying it can't keep on rising. I'm just saying I don't like the idea of buying when it's so high above a major support. Maybe wait for a little bit of a pullback, but if it can break 40 on volume, that would be a good sign. Yeah, Lita, definitely incredible pressure on the CEO because of recent problems and scandals with lumber liquidators. No doubt about that. Would not want to be him. DB was saying spread trade 29 points, long IYT and short Dow. Let's take a look. I'll show you what the spread looks like. Some of you may not be familiar with spread trading, but it's basically where it's like a pairs trade, basically, where you go long one stock or one asset and short another. So that's what this spread would look like. That's the Dow Jones Transportation Average versus the Dow itself. And you can see the transports have been weakening relative to the Dow lately. And that's probably because of rising oil prices. Transportation companies do not like higher oil prices, and that's one of the reasons why they were outperforming up until recent months. You can see it was outperforming when oil prices were dropping. You know, transportation includes everything from airlines to railroads, all sorts of energy-intensive businesses. So you can see now oil prices have been going back up, that it's been losing its momentum relative to the Dow. So, all right, if you lost audio, I mean, obviously you wouldn't be able to hear me, but I think everyone can hear me fine, right? I'm just going to type. Okay, here we go. All right. Okay, so I'm going to take a brief postponement and then wait for Thomas Wood in 12 minutes at 4:30. I'm going to introduce him. So see you guys then. Good afternoon, ladies and gentlemen. This is Jesse Colombo, and I'm excited to have Thomas Wood from Value Charts on with us today with our closing bell. He's going to be teaching us how to trade candlesticks with momentum, and he's going to be showing you how to spot momentum trends, identify the strength of a move with momentum, discuss what is a momentum inflection and how to use them, and then have a live Q&A session toward the end. So thank you so much for coming on, Thomas. Looking forward to it. Hello, Thomas. Can you hear me?
Thanks, Jesse. Yeah, yes, I can.
Sure.
There we go. I cut you out there.
No worries.
Just want to make sure everybody can hear me. Do a really quick test. If you can hear me, just give me a yes or a Y in the question box or the general chat area. I can know that we're coming through loud and clear. Deal. Alrighty. Well, as Jesse said, my name is Thomas Wood. I'm the Director of Trading Operations over at ValueCharts.com. Also run the Futures Trading Room and Forex Trading Room. And today we're going to be talking about momentum. Now, first things first, let's go over the really quick risk disclaimer. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage that may result directly or indirectly from such content from an inability to access such information or any delay in or failure of the transmission or receipt of any instruction or notification in connection therewith. Any past performance results are shown for illustration example only, are hypothetical and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. See how fast I can go through that every time. And then along the same lines, we're required to show you CFTC rule 4.41, essentially saying, look, obviously we can show you charts from the past. That's how we have to show you examples. But there's no guarantee that that's going to happen again in the future. So it's all hypothetical that it's going to happen again. Now that being said, we trade these setups and strategies every day in the trading room in front of hundreds of people, and they work really well, or else we wouldn't be showing them to you. So that being said, let me slow down a little bit, and let's go ahead and get started with the introduction to the NQ Momentum Indicator, which is the thing we're going to be using today for all these setups. Now, what do you use the NQ Momentum for? We use it to identify the strength of a move. It shows us divergences or topping patterns, so we'll be able to identify when a market is potentially getting ready to reverse or going to consolidation. We use it as a confirmation tool for breakout trades. So we look at it if we're taking a bullish breakout, we want to have bullish momentum. Bearish breakout, we want to have bearish momentum. We use it for exit signals, telling us, okay, we've been in this trade long enough, momentum's starting to die out, maybe it's time to take a break or take profits. That way we don't stay in when the market reverses or goes into consolidation. We also use it to show momentum trends. So a market will have a momentum trend in one direction or the other, and normally when that trend ends, the market either reverses or goes into consolidation. Now, the first thing we're going to talk about today is going to be intro to divergences, which is actually topping and bottoming patterns. Now, divergences, they're used for a number of different trading strategies. You can, if you're not a counter trend trader, you don't want to just ignore divergences because they're still very useful for you, even if you are a trend trader. They're used to identify the tops and bottoms of markets. They're used to know when to close an open position. So if we're long, and we've been long for a trend, and then we see a bearish divergence starting to take place, we know, okay, maybe time to take profits. We could be entering consolidation or reversal. You used to know when markets are doing just that, entering consolidation or reversing. They're used to confirm a breakout trade. So if we're taking a bearish breakout, and we have a bearish divergence, that adds additional credibility to that bearish breakout, or bearish breakdown, I should say, and gives us the okay to take the trade. We can also use it for a confirming tool for double tops and triple tops and bottoms. A lot of times you see a double top taking place, and you go, okay, how do I know this isn't going to just break out to the upside and continue to run? Well, if we have a divergence along with a double top, that increases the probability of having a successful double top. Same thing with a bullish divergence, and we have a double bottom or a triple bottom. So we can use it for a number of different strategies. It's one of the most important things. Learning to read momentum, in my opinion, is one of the most important things we can do as a trader because it's going to impact every type of strategy you use. Now, divergences and everything, the setups I want to teach you today, they occur in all markets, whether you're forex, futures, or equities trader, and they can be used on any time frame. Whether you're a day trader or a swing trader, all you have to do is adjust the time frame you're looking at. So if you're looking for day trades, you can look at a 5-minute chart, or you can look at a 30-minute chart. If you're looking for swing trades, you look at a daily or a 240. All right, you want to be a position trader, look at monthlies and weeklies. And you can use the exact same setups, the same patterns that occur on every time frame, and just adjust the time frame according to the type of trader you're trying to be. Now, a divergence occurs, so you're listening to me say, this is a divergence, this is a divergence, but I haven't explained what it is. So a divergence occurs when the price and the market, or the market price and the indicator are no longer correlated, so they're no longer moving with each other, meaning price continues to equally high or equally low prices compared to a previous swing low, but the indicator has strengthened if it goes low or weakened if it's going high. There can be both bullish and bearish divergences. Bullish divergences occur when prices are equal to or go lower than the previous price lows. Now, when I say that, I'm not talking about one price bar in relation to the next price bar, like this, okay? I'm talking about pivot points. So I want to see this. That's what I mean when I say prices go equal to or lower than previous lows. We've pivoted, gone down, pivoted back up, and then gone down again to retest the lows, or done the exact opposite and gone up and then gone back up to retest the highs. So here's the resistance. All right, we've gone up, pulled back, and then gone back up. So we're talking about pivots. Every time I say equally high highs or equally low lows, or higher highs and lower lows, I'm talking about pivot points, not one bar in relation to the previous, okay? Bearish divergences occur when prices go equal to or higher than the previous swing high, while the indicator is lower or weaker than. Now, what is the divergence telling us? Just because we see a divergence, it is not saying that the market is going to reverse the trend, okay? It does not always happen. Sometimes you do find the exact top of a trend or bottom of a trend with a divergence. However, the divergence does not always cause the trend to completely reverse. A lot of times what will happen is the market will just pull back and go into consolidation. They show us that the market's trying to push to new highs or lows without the momentum that the original move had. So it's kind of going for that next leg up, but it's lost a lot of strength. When a divergence occurs, we're essentially seeing that last hurrah that the market makes before taking a breather or reversing. Okay, so it's markets, let's go one more time, and it goes, no, not as many people want to do this anymore, and then pulls back. So this is what I'm talking about with a bullish divergence. This is the S&P on a 120-minute chart. This is a 120-minute S&P chart. This is a bullish divergence. Now here at the bottom is the NQ momentum indicator. Let me explain to you how this indicator works. So this is what I'm talking about right down here, NQ momentum. It's set up similar to an MACD. However, the algorithms for calculating the indicator are 100% different than the MACD. All right, now we do have a fast line and a slow line. The fast line is going to be the blue indicator line, and the slow line is going to be the dotted yellow line. The spread between the two is showing us the histograms. Now, one thing a lot of people ask is, what's more important, the histograms or the actual indicator lines? And the answer is both. All right, we don't take a divergence if it's just histograms. We don't take a divergence if it's just indicator lines. Now, remember, we're not looking at one price bar in relation to another. So I'm not saying, oh, look, this market's coming down here, and this momentum is coming back up. So therefore, this is a bullish divergence. No, that's not a bullish divergence. Bullish divergence is when we go one set of lows, like this, low 1, and then another set of lows that are equally low or lower than, or just about equally low. That's low 2. And then we look at our indicator. Here's low 1. Here's low 2. Look at our histogram. Low 2, low 1. Now, whenever we do this, we want to see the histograms go from green to red to green to red, or just red to green to red. So it has to be broken. That's what we call a broken divergence. Now, you can trade connected divergences, but they don't have as high of a probability of success, so I typically will stay away from them. So this is a broken divergence because it goes red, green, red on the histogram. Let me get rid of this so we can actually see what I'm talking about. So again, here's low 1, here's low 2, equally low just about. Look at our indicator line. We have stronger momentum on the indicator line, stronger momentum on the histogram. Now where's our entry? with this, looking at this chart, we don't want to just buy it as it's coming down. Okay, we never want to just try to pick the bottom and buy it as it's coming down. The reason I say that is because it could just continue to run, and this little bit of momentum that looked bullish at first then looks very, very bearish. What we do is we wait for a break of the previous bar's high, just like that, or we wait until our momentum starts working its way back up. So it's gone down and then it starts coming back up. So if we were buying on the previous bar's high, that means here will be our long entry. Our stop goes below the previous bar's low. We stay in the trade until momentum reverses. Where does momentum reverse? How do we understand when momentum is reversed? Well, that's where momentum trend comes into play. Now, if you look at this, the indicator, so if you look at a price chart, all right, a price trend is higher highs and higher lows, right? So there's a higher high, higher low, and then went into consolidation. That's an uptrend. Well, if we look at the indicator line, now this we're not paying attention. When we're looking at a momentum trend, we're not paying attention to the histogram. We're actually looking at the indicator line itself. So when we're looking at the indicator line, we're looking at the same thing. Are the pivots put in higher highs and higher lows? And if they are, it's a bullish momentum trend. And right over here, when we do that, that's where we stop with the momentum trend. Which means if we got long on bullish momentum on a bullish divergence, we stay in it this whole time, and then we exit as of this point right here. So we had this much risk, and we had this much return, or I should say this much. Make sense? Now, what's good about that is a reward-risk ratio. It's a really good reward-risk ratio. The reason we want to have a good reward-risk ratio is because the better the reward-risk we have, the higher the probability of us being a profitable trader. If you have a 2-to-1 reward-risk, meaning for every $1 you risk, you make $2 in your winning trades, you only have to, statistically speaking, be correct 34% of the time to be a net profitable trader, because one winner pays for 2 losers. So 33.33% of the time, if you're right, you're at even. 34% of the time or better, you're making money, statistically speaking. So the better that reward risk, the easier it is for us to be net profitable. Now, you're probably looking at this and going, well, yeah, that's a really good divergence, and it reversed trend. And the reason we know it reversed trend is because it came back up, broke the previous swing high, because remember, downtrend is lower highs, lower lows. Uptrend is higher highs, higher lows. So we broke the previous swing high, and then we put in higher lows and higher highs. So that means the trend reversed. However, right over here, we had another bullish divergence. So here's low 1. Here's low 2. Here's low 1. Here's low 2. So we have stronger momentum, stronger histogram, weaker prices. Here's a break of the previous bar's high. And all this did was go into consolidation. How do we know it went into consolidation and didn't reverse? Pretty simple. It never broke the previous swing high, meaning it never went up above this previous swing high there. What we did, we went into consolidation for a day and a half. You drew your trend line. You broke the trend line and resumed the downtrend. All right, so let's take a look at another example. This is a bearish divergence. This is on crude oil. So on a daily price chart. So a bearish divergence, where a bullish divergence, we're looking for stronger momentum with weakening prices. Bearish divergence, we're looking for stronger prices with weakening momentum. It's the exact opposite. Again, all it is it's the momentum is not agreeing with the price action. So here's high 1. Here's high 2. Here's high 1. Here's high 2. We have weaker indicator line, weaker histograms. Now this is what's called a no return divergence, where the last one's a broken divergence, where it goes red, green, red, or green, red, green. Everybody still hear me all right? Just want to make sure everybody can still hear me okay. Okay, good deal. For some reason I just got disconnected from TradeStation. It just popped up, so I thought maybe the internet dropped. Alrighty. Where a broken divergence is green, red, green, or red, green, red, a no return divergence is just goes bullish momentum and then not even enough strength to get back up into the greens. That's an even better divergence. It has less upside momentum on that second rally. So here's our entry, all right? Entries on the break of the previous bar's low, which means you're either selling right here or you're selling right here. Either way, your stop still goes above the highs. Either way, you still caught the entire down move because we had weakening indicator line, weakening histograms, strengthening prices. Here's a sell-off. Now, where does the momentum trend come to an end? Well, this whole way down, this is a lower high and lower low, and then we go into consolidation. And the momentum starts climbing again. So what does that mean? It means we're exiting right around here. So our risk is this much. Our reward is this much. Makes sense? Again, giving us that really good reward-risk ratio. Now, once again, as I said before, you don't have to just use this as counter trend. If you're a trend trader, and I personally trade trends. I trade with the trend 99% of the time. It's easier. It's safer for your portfolio, in my opinion. But look at this. Our momentum is climbing, so we're putting in higher highs, higher lows. Then we put in a divergence. So if we had been long, let's say we got long on a breakout over here, on a trend line going down across the highs, we got long right here. Well, look, here's our exit because we got the divergence. So when do we exit? Right up here. All right, and what does that do? Well, that gets us out right at the top and saves us from having all those gains go back against us. All right, now, as those two examples were showing you, the market reversed from the divergence. And as I said before, it does not always reverse. A lot of times it goes into consolidation. That's not a bad thing. Consolidation a lot of times will give us a really good entry. Now, this is how I trade. I trade breakouts in the direction of the trend. Okay? So let's take a look. This is the Euro US dollar. This is on a daily price chart. And here's our low 1. Here's our low 2, which relates to low 1, low 2, an indicator line, and then low 1, which is this entire set of reds, and this low here. So obviously, strengthening momentum, weakening prices. Here's the break of the high. That would have been your rally. Okay? It didn't reverse trend. It just consolidated. Now, when we get consolidation, though, we draw a trend line across the lows. Where do we re-enter? If it breaks a trend line. So here's our sell entry. Now, look at what happened when we broke the trend line. This is called a momentum breakout. So look at our momentum on the bearish breakdown. Look at what we had done. Momentum trended up the whole time we were in consolidation. Then we came over and broke the trend line for our entry, and momentum was trending down again. We had strengthening downside, weakening upside. All right? So now we have a confirmed bearish break for a short, and we get the continuation to the downside. Here's our next bullish divergence. Low 1, low 2, relating to low 1, low 1, here and here, and then low 2, here and here. So we had stronger indicator lines, stronger histograms. Here's the break of the high. We didn't reverse because we never broke the previous swing high. Went into consolidation. There's our support. Here's a break. Here's a new sell entry. Here's continuation in the direction of the underlying trend. Make sense? Pretty simple, but highly effective, which is what we like. Let's take a look. This is Google. Now, this isn't necessarily a divergence in the exact sense of the word divergence, meaning this is more of a weakening momentum play. So here, this high is not equally as high or higher than the previous swing high. So H1 is up here, H2 is here. So you're looking at the pivots, remember? This one's not quite as high as H1. However, look at our momentum. Look how weak the momentum was. Well, if you're a counter trend trader, that means you were selling short right here. That's not a bad trade. You had a nice run right down to the support. However, if you're with trend trader, it's still not bad because we have a trend line going down across the highs. Here's our break with bullish confirming momentum right here. We rally back up and continue with the trend. Now look at the very bottom of Google. What's this? So we have a couple of bullish divergences, all right? Low, 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 low. So here's low 1 and low 2, which is this and then this. So stronger there and stronger here. We bounced back up, didn't reverse, went into consolidation. Here's the support for the break. Let me clean up my chart a little bit so you can actually see what I'm writing. So here's the support for the break. Here's the break. Here's a continuation. And then we have low 1 and then low 2, which is here and here, which is here and here, and here and here. So we have stronger indicator line, stronger histogram, weaker prices. Here's a break of the high. Now this time, it came all the way back up and it broke through all the swing highs, which means a reverse trend. And you can see what momentum did as well. Momentum really picked up. Really picked up. Market rallied very nicely. If you had taken the long here, your exit would have been right over here. So that's where your momentum trend ended, right? And then your re-entry would have been right above where your exit was on that trend line break. All right, stop losses go above the previous swing high or low. So any questions on the introduction to divergences? Pretty nifty way of trading tops and bottoms. People are always asking, how can I pick the top? How can I pick the bottom? Well, if you insist on picking the top or bottom and going counter trend, this is the best, in my opinion, way to do it. Let's go ahead and move on to the next section, which is using momentum as a confirming tool. Yes, the indicator is available in TOS. This is how you use momentum as a confirming tool for breakouts. Now, this is how I personally like to trade, is momentum breakouts. You can read the momentum similar to the way we read price action trends, looking at higher highs, higher lows, or lower highs, lower lows. So if we're looking at a trend in the market, as I mentioned earlier, uptrend is higher highs and higher lows on your pivots. Same thing with the indicator. By using a momentum filter, you lower the probabilities of having a false break. So a lot of times people will tell me, I've heard that trend lines are a terrible way to trade, that you always lose money, and that 90% of the time they're false breaks. Not if you use the appropriate filter, and not if you're on the right side of momentum. Then it's an incredibly good way to trade, and it gets you in the money very, very quickly. Now, for the market, a false break is what we're trying to avoid by using momentum filters when the market goes through your trend line and then doesn't follow through. If momentum's in your direction, you also have a higher probability of getting into the money very quickly. Okay, so it gets us in to the trade and gets us into profitability very, very quick. So here's an example. This is one from the trading room. This was crude oil. Worked out really, really well. I mean, this is incredibly well. We watched this set up for like a year and a half. And this is on crude oil on a monthly basis. Look at so momentum. This whole time, crude oil is right here. All right, this is a micro uptrend. So we're going to put in higher highs, higher lows. We have a really well-defined trend line connecting this low and this low and this low. Perfectly. The market had come down and hit that trend line 3 different times. Look at our momentum. The whole time it was climbing. Momentum was strengthening, 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 strengthening. All right. Now look at what momentum did when we broke through the trend line. There's your sell entry. Look at where momentum was at when it broke. What is this? That means we no longer have higher highs, higher lows on the indicator line. We have weakening momentum come into a bearish breakdown. And you can see just what happened. For 3 months in a row, you had $15, $20 a barrel moves in crude straight in your direction. It goes straight down. Worked really, really well. All right. So this is what I'm talking about when I say I'm a momentum breakout trader. I want to have bearish momentum on bearish trendline breaks. I want to have bullish momentum on bullish trendline breaks, because this is going to increase the probability of a successful breakout. It's going to increase the probability of us getting into the money very, very quickly within a bar or two, which is the goal. Now you can apply the same type of logic intraday, and if we have enough time at the end here, I'll pull up TradeStation and show you some setups from the trading room. This is Apple. Same thing, momentum breakout. Apple on a weekly basis. Now, Apple was trending up, right? And look, momentum was trending up, right? And then momentum started to put in a lower high and a lower low and rolled over. Where was that? That was right here. What happened? We went into consolidation. Now what happens once we're in consolidation? We draw a trend line going across the highs. Where's our trend line break? Right here for your long. This is one, again, from the trading room. And when it broke, it actually gapped above here. Okay, so it gapped up just up to here, which means you would have been entering right around $78 a share. Still not bad. Look at our momentum. We were putting in lower lows. Okay, look at our histogram. It was lower lows, and then we went green here, and then we went red again. And this set of reds was stronger than this set of reds, meaning less downside momentum than the previous set of reds. So that means the downside momentum is losing strength. And then when we broke out, our histogram here was higher than the histogram here. So the upside momentum was picking up strength. And the indicator line was higher than the previous swing high. So our indicator line was picking up strength, our histograms were picking up strength, and our downside histograms were losing strength. All indications that this was a good breakout. Here's your breakout, and what happened? Well, just like we want to see, it got you in the money very quickly and stayed in the money. Now, where did your momentum end? Momentum ended right over here with this bearish divergence, which would have been right up here, which means you would have exited right over here. Now, that's not bad. It didn't reverse trend. It entered into consolidation, just like this. What happens when you're in consolidation? Draw a trend line. Where's your entry on the break? Now, this is not a confirmed breakout because momentum was not bullish at the time of the breakout. We had a weakening momentum. That's what we call a micro trend. Then Apple once again rallied, and now we're over chopping around sideways. All right, makes sense. Here's another one from the trade room. This is gold. This is gold on a 60-minute chart. What we're looking at is gold was in consolidation, okay? Momentum was moving sideways. Our histograms were not necessarily agreeing with this breakout because we had weakening downside histograms and strengthening and weakening upside histograms. However, market was range bound between the previous swing high and low. Okay, because definition of an uptrend is higher highs and higher lows. Definition of a downtrend is lower highs and lower lows. So therefore, because the definition of a trend, anything within this previous swing high and low is consolidation, right? So that means this is consolidation. You had two pretty good pivots. So here's your trend line going across your high. Here's your break for your long. Your stop is entered either below the previous bar's low, or the current bar's low, or the swing low. Okay? Depending on how much you're willing to risk. Look at the momentum on the breakout. The indicator line, by the way, with this trade, when we're trading momentum breakouts. Now with divergences, we want to see both the histogram and the indicator line because we're trying to find a top or a bottom. Okay? With a momentum breakout, we put more weight or more strength on the indicator line itself. The histogram can also act as a confirming tool, just like I showed in the last example, where we have strengthening histograms or weakening histograms. But the indicator line is the most important thing. And you can see the momentum trend, which, by the way, this is a bullish divergence, right? Strengthening indicator line, strengthening histograms. All right, but the indicator line here, the trend was higher highs and higher lows. Okay, all the way over until right around here. What happened? We broke out with bullish momentum trend. Here's a breakout, here's a rally. Just like we want to see. Now on the way down here, what was this doing every time it consolidated? Market was still bearish momentum, bearish momentum, bearish momentum, bearish momentum. Okay? You said, what about momentum with three peaks? Not sure what you mean. So in this, yeah, I'm just not sure what you mean by momentum with three peaks. You mean like a triple top or bottom? If you have a triple top or bottom, you can have a double bullish or double bearish divergence. With this breakout, this is a move from about 87 for your entry. We do not wait. When we trade trendline breaks, this is something everybody always asks. You wait for the bar to close on trendline break. No, don't wait for the bar to close. Because if you wait for the bar to close, a lot of times you've missed half the move and your risk is too high. With this break, you're entering about 1187 at 1187.50 or so. Your stop's down at about 1184. You're talking $300 of contract risk. Your exit, when momentum ended, would have been right over here, 1205. You're talking $1,800 a contract gain off a $300 risk. Not a bad trade if you ask me. And if you just held it to the end of the day, or held it until you broke the previous swing low, another way of managing a momentum breakout, because it's a momentum breakout and we're looking for the move to run right away, just like this, you can trail your stop behind each higher low as it goes. You'll just get out as soon as it stops running, which would have been right about there, still right about 1205 area. Again, not a bad trade. So this is what we're doing for you. Before I pull up some live charts and we can look at some different markets, we can see, because it's really easy. Everybody goes, it's really easy to show it in the past, but how come you can't show anything that's current? Well, I'll show you here in just a minute. If you are interested in the NQ Momentum Indicator, you have to go to valuecharts.com/mom. Valuecharts.com/mom. You can get it for the discounted price of $197. This is normally in a bundle, and the bundles normally range from $750 to $1,500. Okay, so we pulled it out of the bundle just because so many people wanted the momentum indicator just by itself. We said, okay, fine, we'll do that for you. It's $200 for the indicator, which is extremely cheap. If you ask me, that's less than one trade, depending on how many contracts you trade. Valuecharts.com/mom. It's on TradeStation. It's on NinjaTrader. It's on Thinkorswim. It's on Bloomberg. It's on eSignal, Multicharts, Sierra Charts, which is Infinity. So everything basically except for Meta stock. We're not on Meta stock. I don't day trade options. However, Dave Aquino in our trading room day trades options every day. So again, it's valuecharts.com/mom if you're interested in the momentum indicator. Pretty sure it's going to be on your platform. Now let's take a look at some live charts. So this is a trade set up from today. They actually entered over here. This is coffee. Now talking about momentum breakout. All right, here's our trend line. This is coffee on a 120-minute chart. This move today is worth about $2,000 a contract. Okay, you can have it. It's multi-platform license, multi-computer license, so you can use it on different computers. You can use it on different platforms. If you need help getting it installed, you need to send an email to support@valuecharts.com, and then they'll be happy to help you get it all set up right there. Also, if you want to come see us use it, you can join us in the trading room if you're interested in that. valuecharts.com/go. Just like this. /go, G-O. You can get an entire month of the trading room for $7 of both futures and options, equities, and forex. So this is one again from today. This was coffee on a 120-minute chart. There's your trend line. There's your break. Look at momentum going into that break. Look what momentum had done. We had taken a nosedive on momentum. Coffee broke. Coffee ran. What's it supposed to do once we get in? No, that price is for the rest of your life. It's permanent. Valuecharts.com/mom. It's $197 for a lifetime license. Worked out really, really well. This is just a good example. Coffee just took off. Let's take another look at some more markets. What markets do you want to see? I'm more than happy to pull up whatever you want to see. This is the S&P today. This is one of the setups for the trading room. We had a long 1,000 tick chart and a breakout. Right here. Here's our resistance. Here's our support. So we're looking for a breakout. Here is your break above the resistance. What do we have? Our downside momentum. I can't talk. Downside momentum was strengthening. Okay. Or weakening. So the downside strength was weakening. Upside strength was picking up. What is this? Well, this is bullish divergence because our indicator line had a higher low, our histogram had a higher low, prices were equally low to the previous swing low. There's our breakout with strong momentum, and we had higher lows on the momentum indicator line. What happened? Well, it rallied just like it was supposed to. Make sense? You want to see ABO on a 1 minute chart. 1 minute's kind of short term. If you're looking at a short term chart like this, which by the way, this isn't bad. I mean, we were consolidating for a little while. Here's your trend line for your consolidation. Here's your breakdown. Look at what your momentum was doing when it broke down. Well, if that's not perfect, I don't know what it is. What was this right here? Bullish divergence. Stronger indicator line, stronger histogram. Weakening prices. Here's a break of the previous bar's high. Here's the rally, and then sideways consolidation. Then we draw our trend line. Then we get a breakout, and it's sold off. Would MACD work? MACD, you can use MACD. It does not work the same, though. The algorithms for it are different. I don't like the way MACD works compared to the momentum. It doesn't quite give the same setups. Any other markets you want to see? Look at bonds. Here's a 500 tick chart. This is another one from today. This was actually a trade that we had in the trading room also. Now, this was a short in bonds. We had two different setups. One was on 250 tick, one was on a 500 tick. The 500 tick was this trend line break right here. And we made $300 a contract on the short. Bearish momentum come down with an uptrend line, broke the trend line and dropped. Then it ended up reversing, pulling back up. And then the other one was on a 250 tick. That was this channel first thing in the morning. We're looking at this right here. Oops, slow down there, trade station. Where are you going? We're looking at this right here. Okay, we've gone to consolidation. We had the bearish divergence. We said it was a sell below the swing low, which was at 53 and 7, up above the high. Re-entry on the bounce with the bear, what we call a bear flag, which is this inflection right here where momentum goes down, back up, and accelerates again. That has you selling right here because you had weakening momentum with a support break. That sold off all the way down, hit the trend line, broke it, came down again. Just like we wanted to see. So great setup there. Now, for those of you that are going, well, that looks a little bit too noisy. That chart looks so noisy, I can't tell what's going on. All you have to do, take our momentum settings. We're going to double them. We're going to go look at 64, 10, and 10. Go 64, 10, and 10. Now it's a little bit easier to read the momentum. Lower high, lower low. Reverse, higher highs, higher lows. Consolidation. And then back to higher highs, higher lows. Consolidation. Pretty simple. So again, for those of you that are interested in it, it's available on TradeStation, NinjaTrader, Thinkorswim, all of those, all the above. ValueCharts.com/mom. Would love to see you in the trading room if you want to come check it out. Just go to ValueCharts.com/go and get an entire month for $7. I'll come watch us trade and see what we can do. Love to have you there. I want to thank everyone over at Cyber Trading University for having me today. Jesse, that is it for me. I'm a little bit early, but that's all right. So again, thank you all for coming out. The link, once more, is ValueCharts.com/mom. If you need help, you can always email support@ValueCharts.com, and we'll be happy to help you out there. So until next time, happy trading, everyone.